Welcome back to the second half of the Future Show here on the TD Ameritrade Network. We're now less than 60 minutes away from the cash open for stocks on Wall Street. Scott Bauer, the CEO of Prosper Trading Academy, joins us to help us get ahead of, well, a busy week potentially for commodities as well. Scott, welcome. No numbers at the bottom of the hour, but this week, I'd imagine the focus is going to be on the JOLTS data to begin the week tomorrow. It seems to be the kind of last page in the chapter on U.S. labor conditions and, well, the impact that they're having here on the economy.
Yeah, no doubt. And tomorrow's number probably is not going to be an outlier, Ben. I'm not sure that that's going to be the continuation of what we saw last week or really have any effect of some of the cutbacks that we saw yesterday, right? The stopping of federal payments. Mm-hmm. But it is a continuation. That will be a big number, I believe, going forward. I don't think tomorrow's number is going to be much of an impact, but yeah, the focus has been on jobs. It has been, especially last week, on the week number. And let me just say something right here, Ben. Last week you and I spoke, and I said that if there was an outlier number, especially to the downside on that August payroll number, I thought the market was going to sell off handily, and I was wrong. I'm surprised I was wrong, and we move forward.
Yeah, well, this market has been resilient, to say the least. We started off the show talking about the new all-time highs in the indices, and nothing at this point to derail them. Scott, it doesn't sound like you think the JOLTS will do that, and many were surprised this didn't. The non-farm payrolls, again, at 235,000. Scott mentioned well below expectations, 750,000 they were looking for. Now, last month's got revised up a little bit above the 1 million mark. That was a good sign, but I think it was revised up something like 100,000, so nothing major there. Scott, we were talking about some of the weak manufacturing PMI data that we've seen, the jobs and misses we just mentioned. I mean, ultimately, what does this mean for commodities? Because with rates somewhat sideways, the TNX inching up a little bit. We talked about that also at the top of the show, but for the most part, they seem to be pretty comfortable right now as the dollar's in a bit of a retreat off recent upper levels. You and I have talked about the failed attempt up around the 93.50, 93.75 level and the March highs that it got up above, but follow through is limited. So as the dollar pulls back, and I mean, in the Goldilocks scenario is very comforting for crude and copper at these levels.
Yeah, there's a lot of complacency. There's a lot of comfort, as you said, and the weakening dollar certainly helps the entire commodity space. So any of the negativity, any of the negative news that you may see, whether it's in crude and gold, whatever it is all being underpinned by the fact that the dollar has been weaker, and that's certainly helping across the whole space.
Scott, a busy week in terms of, oftentimes we lose sight of the fact that grains, we've got the WASDE report this week where the inventories pushed back a little bit. One thing I've been watching, I'm not sure how closely you've been keeping an eye on as we head into the summer heating season, and some of the inventories coming a little bit below expectations, still builds into this fall, but natural gas in quite a rip higher. I mean, it's starting to attract some attention, trend environment to the upside nonetheless, and whether you trade this product or not, I always say this is a great product, a textbook example oftentimes of a trend environment, as is the case, and in this case, to the upside.
No doubt about it, and a rip higher is the way to really describe it. And there's a couple things there. Obviously the tragedy with the storms that we saw, but then we've also had extended extended temperatures pretty much across the U.S. as well. Going late into summer into early fall now, we've seen higher temperatures. So that little bit of supply constraints here, all kind of meshed together here, really helping with that huge rise that we saw in LNG.
Here's a look at it in terms of the daily time frame. Just want to point out, really is yet to quit. Continued most recently up to 477. Here again, the last, year's worth of daily candles. But as we zoom out a little bit, you can see again, this gets us back to levels that we haven't seen since that 492 level we saw the fall of 2018. And just want to zoom out a little bit more, because should we get above that 492 into that $5 level, Scott, we're talking levels we haven't seen since February of 2014.
Yeah.
How about gold, though? We were talking about crude, copper, comfortably in this range. Gold's kind of hovering around 1,800. It did seem to benefit mildly from the U.S. dollar getting a lift, but it's also one of these products that hasn't really been getting too excited or has seen too many significant moves tied to some of the kind of ebbs and flows in terms of the hawkish or dovish comments from Fed speakers, possibly helped by some of the transparency from Fed Chair Jerome Powell ultimately. He's been pretty clear in terms of his message, and gold seems to be a pretty good reflection of that.
No doubt about it. And that's why we've seen volatility really decrease as well in the gold space. And I think it is because of the transparency. You know, what it comes down to now, Ben, is we know they're going to taper. And is it just, September, December, maybe March? And how much is that really going to affect the overall commodity space, especially gold? We know it's going to happen. So we've all kind of settled in. Gold is also, much like many of the other commodities that we're talking about and interest rates, kind of in that complacency mode right now. It is holding above 1,800. Again, the softer dollar is helping that as well.
It's hovering just above its 50-day moving average as well. Let's take a quick look at the daily time frame. I want everybody to see. And then lastly, Scott, I know we were supposed to be talking commodities, but when you're talking commodities, a big part of this is the U.S. dollar. You ended your thought on that note. If we could just get your sentiment here in terms of where you feel like we're headed, because we have been coming off here, and it does seem to be, building momentum into this 92 handle, briefly on the jobs report below the 92 handle.
Yeah, it did. And I think we hover right here. I'm not sure what the next catalyst is going to be to make a run back up at those 93.5, 93.70 area that we're just there, that you and I were talking about. I'm not sure what gets us there. I'm not so sure, though, when I look at everything macro going on, I just don't see the dollar weakening that much further from here. I really don't. A lot of it may depend on the decision the Fed makes when to taper, not if, but when they taper. But I think what will be interesting is later this week, we get news out of the ECB and out of Australia and Canada on their interest rate decision. So I think it's going to be interesting to see what our dollar does based on what we see the rest of the world doing this week. It
is, Scott. Central bank activity. Certainly, I mentioned the WASDE report. Inventories pushed back a day, but all these products combined and some of the fundamentals behind, are there any products that we didn't cover that you have your eye on that you think we should be watching as well?
I really think natural gas with that big pop we saw last week is one to watch. Okay. I think it would be real hard pressed to break through that 490 level and into the 5 handle. But, certainly we want to watch that. Gold has been, just a proxy, I think, for the overall market, Ben, of this kind of mode of complacency here, which I think overall the market is going to start shuttering out of complacency. I think volatility is going to start to pick up. I think volatility across the board, whether you're looking at VIX, whether you're looking at, vol in the S&Ps, whatever it is, I think vol is way too low for everything going on right now, from tapering to geopolitical events. And quite frankly, I know we just finished an earnings season, but just around the corner, we're going to have third quarter, or the fourth quarter earnings season coming up here starting in early October.
All right, and some expectations that might not be as hot as the most recent quarter, which really did in many ways wow investors, kind of helped lift sentiment relative to some of the China demand concerns, Delta variant concerns, ultimately crackdown in terms of tech that had. Scott, you really a great breakdown here in terms of what's playing out as far as the commodities, and appreciate you joining us here to talk about, also squeezing in some of what's going on in terms of the U.S. dollar financial markets as well. Scott Bauer, CEO of Prosper Trading Academy, starting his week with us here on the TD Ameritrade Network.